What is additionality? Additionality describes the role concessional capital plays in a blended finance deal. Concessional capital is considered additional if it catalyzes financing that would otherwise be unavailable for that deal. The level of additionality can be complex to determine. It's impossible to say with absolute certainty this is what would happen if concessional capital did go in, as opposed to if it did not go in. However, the presence of concessional capital is usually additional if 1. It deploys financial instruments that are currently unavailable or undersupplied in the market, or 2. If it addresses a market failure. An example of a blended finance deal with a high degree of additionality is the Green Receivables Fund in Brazil. There's a high degree of additionality because the Brazilian Development Bank, the traditional source of green financing in Brazil, has been scaling back its investment. This leaves a gap in the market. The Green Receivables Fund fills this gap by using an asset-backed securitization solution. In this way, it uses concessional capital from international public investors to catalyze the local capital markets, which brings financing into a sector where there is currently a shortage. So, additionality is critical to blended finance. It tells us the role that concessional capital plays in drawing out commercial capital into a blended finance transaction. In other words, it tells us whether or not blended finance was required in the first place.